Hey everyone. I got a really great video today. I'm really excited to share this one. So, before I start with the reason for the video, I'm going to start off like this. Okay. As of today, my Discord is now free for everyone. Now, there is still a Patreon aspect to it, but I figured that if I let people in for free that are wanting to learn options, that at very least it'll be a good starting place for them. So now, if you're in the free Discord part, you'll still have access to me. I talk in there every day. Members will talk in there every day. You can ask me questions. I'll also share trades and the rationale behind the trades that you can look at and see if it's worth your while. But I just want to say in the description, as of today, you can now join the Discord for free. So I hope to see a lot of you guys in there. So today's video is really cool. So part of the Patreon, a section in the Patreon, is whenever there is a trade that I believe to be high probability, right, or safe, nothing is 100%. But whenever there's something that I deem as safe, I share it. And I'm proud to say that so far, ever since January 29th, when I've been sharing these specific types of trades, I'm batting 1,000. And we're gonna go over the trades that I've done that have already finished and we've already won on, and you're gonna get to see the kind of return that I've gotten on those since January 29th. And then we're going to go over pretty quickly the trades that we're still waiting for the expiration date to come. So we're going to go over them in expiration date order. So this is going to be a good video. I hope you guys enjoy it. So these right here are all the trades that I've done, and these in green are the ones that I have completed already. So again, I'm 100% on all of these trades so far. To explain the criteria, right? So the individual doing them, like me, for instance, I can definitely do more than one contract, but I figure that the best way to show this to the world is just on a one contract basis. And then, you just multiply the gains by that many contracts if you decided to do more. So these are all the trades I have. I tell you if it's a call or a put. Oh, and these are all credit spreads. All of them are credit spreads because I highly believe that credit spreads are the best for making money, and you'll see what I'm talking about. So the very first one I did was on the QQQ, and I go over the strike sold, because when you do a credit spread, you have to sell a strike and then you have to buy a strike. So I sold the 437 and I bought the 438. I was paid 18 cents, right? Excuse me. I received 30 cents for selling the 437 and paid 18 cents for buying the 438, which gave me a total credit of 12 cents. That particular trade has a 92% chance of being out of the money, which is good for me as a premium seller. This means a 92% chance that I'll make money, right? That's what probability of OTM means, probability of out of the money. The max gain possible for each contract credit spread was $12, and the max loss is 88. So you're probably saying, well, why are you going to do that if you can lose more than you can gain? Yes, when you do a credit spread, usually, if not always, you can lose more than you can gain. But the reason that these are so great is because in credit spreads, when you do them correctly, the odds are in your favor that you won't lose money, right? And I'm not going to get into that because I still have to make a video on teaching people how to do credit spreads. But definitely that is what I mainly do every single day, and also what I teach. So 1, 2, 3, 4, 5, 6, 7. So we've done 7 trades that have expired in our favor, and I'm batting 1,000. And now we're gonna show you some details on that. So I added them all up, right? Because we didn't get 100% of the gains in all of them. Like in this one, I had to buy back for 10 cents. This one I had to buy back for 4 cents. This one I had to buy back for 40 cents. So I only realized $90 when I could have realized 150, but I thought it was safer just to close it out early, et cetera, et cetera. So long story short, since January 29th, with all else equal, I made 13% return on risk, meaning the total risk, because credit spreads are defined trades. That means you defined your risk. You know exactly how much you can make, and you know exactly how much you can lose. It's called defined risk trade. And the most I could have lost is $2,994. But instead of losing, I actually made $374, which means I made 13% on my money, or 13% on my risk. All right, now to the fun stuff, right? And as you can see, we're going to go over all of these trades right here that are blank, right? We're going to go over them. I'm going to show you why I did them. We're going to look at the chart and explain to you why I think it's going to work out in my favor. So let's go. All right, so this first trade, right, is a Marvell, right? A Marvell trade. The max gain possible is $22. The max loss possible is $22, giving me a 28.21% return on my risk if I get to keep 100% of that $22. The probability of it being out of the money is a whopping 75%, which means there's a 75% chance that I will make money on this trade. So once, if we look at Marvell, right, we see, oh, well, let me look. What was the 64 strike, $64 strike? Okay, because I got to remember the strike. Okay, so this is the current chart of Marvell, and I went ahead and just left all my indicators there so you can see what I see. So yes, Marvell does have a head and shoulders pattern showing up, but I am a very big fan of Elliott wave theory. And although I do think that this wave 4 has been solidified, I think it is more likely that we don't complete this shoulder. I think it is more likely that we go up here, that Marvell actually goes to the upside, and we'll go to that we'll finish that fifth wave. But the fourth wave can keep on going down, but I don't think that's going to happen. So 64 strike is down here, right? So in order for me to lose money on this play, it does in fact have to close out this head and shoulders and then go down a little bit more. I don't think that's going to happen. So that's why I went ahead and did this trade. I do think that by May 10th, Marvell will still be above 64. So I think this is a good trade. Next, we're going to go to let me see. Right, so this is a put spread, as you see here. I sold the 64 and bought the 63. Yeah, so it's definitely a put spread. These are all spreads, no debits. So the next one is DraftKings. Okay, so when I go to DraftKings, DraftKings is definitely in what is called a falling wedge. A falling wedge pattern is a bullish pattern. I mean, usually it'll break out to the upside, right? But let's go to the daily. There we go. Okay, so on the daily, right, it is actually kind of bearish. So let's look at what my trade was, just so I know. Okay, I sold the 46 and I bought the 45. It gives me a premium, a credit of 50 cents. Oh, okay, so this is a 50-50. So this is a 50-50. If I'm going to lose one, it's going to be this one because the max gain possible is 50 bucks and the max loss possible is 50 bucks, right? So that's why it's 100% gain on risk because I can either make 50 or lose 50. And it is only slightly in my favor at 55%. So 46. So let's see where we're at with the 46 strike. So 46, we're actually already below 46. So in order for this play not to lose money, I actually need it to recover. So it has to go above this line. So if I'm going to lose one, this is going to be my first loss. If I'm going to lose one, luckily I didn't do too many of them. So when does it expire? It expires on May 10th. Okay, so we have until May 10th. All right, there. Okay, so I have this long for DraftKings to hopefully be above 46. I'm probably going to lose this one. Uh, I may buy it back next week at a loss, at a less than $50 loss. I'll probably cut losses at 50%. So at a $25 loss, I'll cut losses on this one. So this is probably going to be my first loss. All right, let's go to the next one. QQQ is my next one. Okay, now this is a bear call spread. This expires on May 10th, and I am definitely bullish on winning this one, even because I am bearish on the Qs, and I'll show you why. So on this one, I sold the 452 and I bought the 453. So this is a bear call spread. I got a credit of 35 cents, and this actually has a probability of OTM of 70%. Okay, and it'll give me a max gain on risk of almost 54%. So let's look at the Qs. Yeah, so I am definitely bearish on the Qs. I'm going to talk a little bit more detail on this because I actually trade the Qs every single day, but I traded by way of NDX, which is the overall index. And I'm about to make another video teaching you guys what a 1256 contract is. So be on the lookout for that. So these two red lines right here depict a rising wedge, a long-term rising wedge. And we have finally not only broken it, but closed under for 9 days. Let me see, 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, we closed under this rising wedge 9 days now. So to me, that has solidified the downturn, right? This yellow line right here is the trending. This is the trending line that the even on bullish days cannot seem to pass. So that's why I put that there. Now we see that we have a double top. That's what this little red two double triangles are, and double tops are bearish, and here's a target for that. And then we have a rising wedge within the rising wedge that is another bearish signal, and here's a target for that. But then here are the targets, and these are the Fibonacci retracement levels of the 38.2, the 50, and the 61.8. And these are the three most popular reversals, because remember, nothing goes down forever. So it'll go down, catch a spring, and then continue to do whatever it's going to do, whether it's go up or go down. But usually these are what's called reversal areas, high probability of reversal areas. But I do think that the market has finally started to take a break. And that's why I did a bear call spread on QQQ. Uh, again, I sold the 452, and so if we look at the 452, 452 is all the way up here. Like it's you have to make new all-time highs. Yeah, so I am definitely very bullish on this one. I'm going to get 100% of my premium on that one. I am sure of it. I have lots of trades with the QQQ. All right. What's next? All right. The next one is MSTR. MSTR, we sold the 800. We bought the 790. So this is a bull put spread. Total credit was $3, 70% out of the money. Max gain possible is $300. Max loss possible is $700, right? And it gives you a 42%. So what is the strike that we sold? 800. So let's look at MSTR. Okay, MSTR is still way above 800. And in order for me to lose money on this, MSTR has to fall all the way down to here. Okay, I don't know. I don't think that's going to happen at all. Even especially with the halving coming, I am bullish on crypto. So yes, it's taking a breather now, but I do think that we are going to bounce even higher. So I actually am going to make some call debit spreads on MSTR. Okay, I'm gonna gamble and hope that an upside, a big upside comes. But yeah, that I think that's as good as gold right there. All right, next is CLSK, which is another crypto play. This one expires in September. We sold the $9. We bought the $7. So we got a 90-cent credit, 65% probability of making money on this one, and we'll make 81% on our money. All right, this is a good payout. So the strike sold is 9. So let's look at CLSK, and it's by September 20th. All right. So this is CLSK. $9 is all the way down here. Okay, all the way down here. I do not think that, again, CLSK is going to get there. I am counting this as basically free money. As this Elliott wave theory is saying that as soon as this A wave is finished, which it hasn't 100% finished yet because it's a dotted line, but if it was a solid line, it means it was finished, but it's going to recover up. And since the chance of it recovering up is so high, plus I have so low to go, I mean, anything can happen. I'm not Nostradamus, but I really do think that this is a great trade. All right. Next is Lulu. I actually did this one today. Lulu, we sold the 320 and we bought the 310. It gave us a credit of $3.30 with a 67% out of the money percentage, which means a 67% chance that we will make money on this play. And if we make 100% of the $3.30 per share, we will be getting paid a 49.25% max gain on risk, basically 49% on your money. So the 320. So let's look at Lulu, which is extremely oversold, which is why I took a position today. So this is Lulu, and Lulu dropped severely, right? It gapped down and kept going, and even today wasn't a great day, actually. And it's currently at 336, and I said, and I sold the 320. So I sold the 320. So Lulu can go all the way down to here, right? It can go to here. And I believe it's what's the expiration date? I really need to pay attention to expiration dates. The expiration date is September 20th. Okay, so 161 days away. So it's a longer play, 161 days away. But I do believe that Lulu is going to find a bottom soon, and the reason I believe that is because I manually use Fibonacci retracements. So what I did to find the Fibonacci level is I went to the absolute lowest part in Lulu, which was over here, and then I went to the highest part, which was over here. And then I used those retracements I told you about. You got the 38, the 50, and the 61.8. Now we're already past the 61.8, so the next one is the 78.6. It's very rare that it goes down to 78.6, so it's most likely going to find a bottom before the 78.6. But I could be wrong. It could keep on going, but we'll definitely see. But I'm still very bullish on this one. All right, last but not least is going to be SSRM. And SSRM is a gold miner play that I did. As you can see, this one expires on January 17th, 2025. So this is a longer term play. I sold the $5 strike and I bought the $3 strike. So that's a $2 spread. I received 95 cents, right? So the max gain is $95. Max loss is $105. So I'm almost getting 100% on my risk if I am right. So now let's look at the chart and see what SSRM has been doing. Remember, it just has to stay above $5 on expiration day. Yeah, so SSRM is all the way down here. So I'm going to have to zoom in for you guys. All right. And, back in the Discord, back when SSRM was here, I was like, guys, this is going to break out to the upside. And sure as shit, it did. Right. So SSRM is at 519. Now, I made money on SSRM down here, but as far as this play, it's at 519. And I just needed to stay above 5 in January. And if you know about SSRM, it's extremely oversold. It's a gold miner, and especially since the market is going on its downturn, gold is going to go up in value. And even though the reasons for this downturn are legit, because they had 9 deaths in Turkey at a mine, I still believe that SSRM is extremely undervalued when you look at the fundamentals. So all in all, that's everything, everyone. Those are all the plays that I have shared to date in the Patreon, and I think this is going to be a bi-weekly episode. This is episode 1. Again, I would like to say that in the description below, there'll be a link to the Discord. Join for free, learn options for free. You don't have to pay anything. I have a goal of teaching people how to do options. I'm gonna put a link, not a link. It's gonna click up here somewhere. There'll be a video that all option beginners should watch. It's 2 hours long, where I break down the fundamentals of options for you. Costs you nothing. I hope you learn. I hope you get excited. I hope you get motivated. At the time of doing this, there's 2 people watching, so thank you for those 2 people who are watching. I hope this video gets some traction. But with that said, I hope you like the content, and have a good weekend, everyone. Good day.